So, what actually happens if you just walk away from your Michigan LLC? You've closed the doors, stopped taking orders, and you're just ready to move on. You can just forget about it, right? Well, actually, wrong. Simply abandoning a limited liability company without formally closing it down is honestly one of the most dangerous and potentially expensive mistakes a business owner can make. You might think the business is dead and gone, but in the eyes of the law, it is very much alive. Legal experts have a great term for this. They call it a zombie afterlife. Essentially, a zombie LLC is trapped in this weird legal limbo. It can't legally conduct any new business, but it absolutely still exists on state records. And because it still exists, it just keeps on racking up annual fees, missing tax deadlines, and most alarmingly, exposing you, the owner, to personal liability, audits, and lawsuits. It's this lingering threat that can literally follow you around for years.
Okay, let's dive into this. Welcome to This Explainer. Today, we are going on a bit of a hero's journey to officially lay this zombie business to rest for good. We're going to cover exactly how to dissolve an LLC in Michigan. We'll walk through the specific legal, financial, and administrative steps you absolutely need to take to protect yourself and cleanly close this chapter of your entrepreneurial life. Here is our roadmap for today. We'll start with the zombie LLC problem, move into preparing for dissolution, then cover the official state steps, followed by federal post-dissolution tasks, and finally wrap up with some practical tips and pitfalls. Starting with Part 1, the zombie LLC problem. Let's really understand the stakes of administrative delinquency. We really need to understand the stakes before we can start the cure. According to legal experts, failing to properly dissolve your LLC means Michigan still considers it a fully active entity. That means the state is sitting there expecting your annual statements. And yes, that $25 annual fee just keeps compounding year after year. But it gets worse. If your company gets sued or audited, that limited liability shield that protected you while the business was actually running, it could be completely compromised if you're found to be an administrative delinquency. The consequences are incredibly real, and they can pierce right through that corporate veil directly to your personal bank account. Moving on to Part 2, preparing for dissolution. This is all about the internal battle before you ever touch the state paperwork. A lot of people think dissolving a business starts by just filling out a government form. It actually doesn't. It starts inside your company, and you have to follow a very strict chronological path. First, you have to formally vote to dissolve. Then you begin winding up your affairs, stuff like finishing out your remaining contracts and closing down operations. Step 3 is absolutely crucial. You have to settle your debts and notify your creditors. Basically, you have to pay what you owe. Finally, and only after all those debts are paid, can you distribute whatever assets are left to the LLC's members. The order of operations here is everything. If you jump straight to Step 4 and hand out assets before paying your creditors, those same creditors can come after you personally in what's known as a clawback claim. You definitely don't want that. Let's look a little closer at that very first step, the vote. Now, ideally, your LLC's operating agreement dictates exactly how a dissolution vote should happen. But what if you never actually drafted one, or maybe it doesn't even mention dissolution? Well, that's when Michigan default law takes over. And let me tell you, Michigan default law is strict. It requires unanimous member consent to dissolve if your agreement is silent. Every single voting member has to agree. So whether it's just you running the show or you have 5 partners, you need to get that decision documented in a written, signed resolution. All right, Part 3, the official state steps. It's time to battle the LARA and Treasury forms. Once your internal affairs are completely in order, it's time to tackle the state paperwork. At both LARA, that's the Department of Licensing and Regulatory Affairs, and the Michigan Department of Treasury. Your primary weapon in this phase is Form CSCL/CD731. This is the Certificate of Dissolution. If your LLC actually commenced business at any point, this is the document that formally terminates your legal existence with the state. The easiest way to get this done is online via the My Business Registry portal. It just asks for basic information, your LLC's exact legal name, your state ID number, the reason you're dissolving, and an authorized signature. Now, are you ready for a surprisingly pleasant fact? The standard filing fee for this LARA form is just $10. Seriously, that's it. $10 to formally close your business with the registry. Of course, if you happen to be in a rush, let's say you need to dissolve immediately to close some sort of complex transaction, Michigan does offer expedited review tiers. You can pay a bit extra to have it processed in 24 hours, the same day, or even within 1 hour if you're willing to pay a premium. But for most folks, that standard $10 fee works out perfectly. But wait, just filing with LARA does not close your state tax accounts. This is a huge trap. LARA and the Department of Treasury do not automatically talk to each other.
So, within 15 days of ceasing operations, you have to submit Form 163 to the Treasury to discontinue your tax accounts. Then, within 60 days of filing your dissolution, you must submit Form 5156 to request a tax clearance certificate. Doing this triggers an audit of your state tax accounts just to prove you owe nothing. If you miss the 60-day window, the Treasury will just keep expecting tax returns from your zombie LLC.
Part 4. Federal Post-Dissolution Tasks. Let's talk about slaying the federal beast and wrapping things up.
So we've handled the state, but closing your business with Michigan simply stops your obligations at the state level. The federal government, as you might guess, has its own records. Dissolving your LLC in Lansing does not automatically cancel your employer identification number, your EIN, and it certainly doesn't close your federal tax account with the IRS. So what exactly do you need to do on the federal side? First, when you file your last federal tax return, whether that happens to be a Schedule C, a 1065, or an 1120, you absolutely must check the box that says Final Return. That one single checkmark signals to the IRS that they should stop expecting future filings from you. Second, you actually have to mail a formal letter to the IRS in Cincinnati, Ohio. You'll need to state your business name, address, your EIN, and your reason for closing the account. And while you're at it, don't forget to cancel any local city or county permits you might have. Finally, make sure you keep all these records for 7 years, because the IRS can still legally audit a dissolved business during that window. Finally, Part 5. Practical tips and pitfalls. Dodging the common legal traps of dissolution. So how do you dodge those common legal traps that end up snaring so many entrepreneurs during this process? Well, one of the absolute best ways to protect yourself is by actively cutting off future liability. Michigan law actually gives you 2 tools to do this. You can send direct written notice to your known creditors, which forces them to submit any claims they have within 6 months. If they miss that 6 months deadline, their claim is totally disallowed. But what about unknown creditors, people you might not even know you owe? You can publish a notice of dissolution in a local newspaper. This sets a hard 1-year deadline for any unknown claimants. Doing this creates a definitive, legally binding end date for your business liabilities. Now, you also need to watch out for a few major pitfalls. As we mentioned earlier, premature asset transfers, paying yourselves before your creditors, is a massive legal mistake. Minority shareholder disputes can also completely derail the process, which is exactly why getting that formal vote is so incredibly important. Also, inadequate record keeping will absolutely haunt you during the Treasury's tax clearance audit. And finally, you have to be hyper-aware of worker classification errors. You need to ensure your legal documentation matches your tax filings perfectly. Just to give you an example, if you run a restaurant and you're closing it down, a simple misstep in how you calculate your final server tip deductions under Michigan House Bill 4961 could trigger a massive post-closure IRS audit. And that brings us to a very necessary quick timeout for a reminder. This explainer is strictly for educational purposes, to give you a clear roadmap of the process. But every single business is unique. Your ultimate shield against liability is consulting with a qualified legal professional or a CPA to truly understand the specific implications for your individual situation. They can look at your specific operating agreement and your tax standing and guide you safely through it. Well, you've gathered the documents, you've paid the debts, filed the forms, and dealt with both the state and the IRS. You have successfully cured the zombie LLC problem, which leaves us with just one final, really exciting thought. Now that your LLC is safely laid to rest and your liabilities are fully closed out, what will your next entrepreneurial chapter be? The slate is completely clean and the future is yours to build. Thanks so much for joining me on this explainer, and good luck out there.